It's largely like a qualitative judgment which these analysts are making. So we don't know. I think that's the we'll have to wait for MSCI in terms of what they do. Jonathan Schiessl is with us, Deputy Chief Investment Officer at Westminster Asset Management. We also have Dilip Bhat joining in, market veteran. Great to have both of you here, gentlemen. Appreciate your time. Jonathan, if I can come to you first. You heard my colleagues Nimesh and Vivek kind of outline the MSCI related issue and what is expected later. We don't know what is expected, but we know there is an announcement to be expected. How are you looking at this whole thing? And if you can give us a broad sense, how important is these changes by MSCI? How important have they been historically? Go on.
Yeah. Hi, everybody. Yeah. Look, it's the saga continues, obviously, and in many respects, I guess you could look at this and see perhaps there's some vindication in some elements of the short sellers report, and hence MSCI is catching up from perhaps what it should have been doing all along, if this is indeed true. Yeah, we've tended not to get too het up with MSCI news of this sort of matter. Markets tend to price it in, very quickly, and that's exactly what we've seen today. Market pricing in potential, how many days selling needs to be happening, etc. So we tend to find that markets already have moved before you have a chance to do much before that. And obviously, passive investing has been massive over the last decade, 2 decades, and there is a huge amount of money following these things. But yeah, from an active perspective, tends to throw up opportunities sometimes. But yes, it's news that we don't tend to get too head up with.
Dilip Bhat is also with us. Dilip, could you give us an indication of the retail investor perspective and what is happening in the markets right now? Because many retail investors had jumped in the Adani bandwagon and they've ridden on the way up, but it's difficult to get out. Can you tell us what's happened with the retail investors in the last one week?
So I think the retail investors actually, probably all of them really are not very smart enough to get out, because once it falls in a big way, you always have that hope. So I'm sure a lot of them are still stuck up in this because they have seen the higher end, and generally the retail investor, the psychology is not to book or not to get out when it's coming down. And that's typically been the reaction of the retail all along. So I think as far as that is concerned, Adani is concerned, I think there was not really any great retail participation, or apart from those core FIs, not really great participation from FIs or DIIs, except for 1 or 2, which is very, very well known. So in my opinion, and since this rumor has been floating for quite some time now, based on that research report, so I think a lot of it is in the price. So I wouldn't be, I'm not really too apprehensive about this. Whatever decision they take, I don't think it will turn out to be anything greatly negative.
Okay, all right. Gentlemen, request you all to just hang on. I just want to apprise our viewers of, the analyst call that was held yesterday by Ambuja Cements Management, which is now the Adani management. And in fact, let's run you through the broad pointers out there. They said they're committed. The big headline when they took over was they're going to double capacity. They're saying we're going to go by that from 70 to around 140 million tons odd. But though they didn't highlight how much of it will be organic, how much of it will be inorganic. So that's point number one. Second factor is everyone's wondering why they're making advance payments on coal. They clarified out there. They said that, yes, we have made advance payments, but it will be at a lower cost. So there'll be some cost savings. And they further went on to clarify that, no, it's not from a group company. It's not a related party transaction. Some part of the street, well, they took it, but there were a lot of counter questions as well, that who was this, advance money paid to? That remained a little bit unanswered. They clarified, though, on a couple of other aspects. Some were wondering whether or not, since the Adani Group could be in a bit of a spot of bother in the near term, they're asking, will you introduce some royalty payments? They clarified, no, as of now, there's no proposal to put any kind of royalty like what the erstwhile promoter Wholesome did. And also they said there's no merger on the cards, at least as of now, because there would be some synergy benefits that could come out. But they said, as of now, they are working on operational efficiency, but not on a merger. They also highlighted that they're looking on waste heat recovery systems, alternate fuel usage and all, which will help margins. And they say margins will go to 4 digits, which is good. You will have more than 1,000 rupees EBITDA per ton, and that's their focus point. But they're also talking about a big capex of around 10,000 crores, which will be spent on the efficiency enhancement program over the next 18 months or so, which is quite a large number, but it's interesting to see how they do that. The management, they said, let's take all queries only on the cement business. Let's not talk about the promoter entities. Some people wanted to know about the Adani Group. Finally, Jefferies, well, they are a brokerage that have gone ahead and tweaked their estimates, so we're highlighting them. They maintained their buy, though they've slashed the target price around 490 rupees odd. They've cut their multiple as well. Earlier, they upgraded the stock and put a multiple of around 16 times. Now, they've drawn it down to around 14 times. And they're factoring in a 12 to around 14% cut in EBITDA because of the likely volume underperformance in the near term and also pricing pressure for the entire industry. So that's about Ambuja Cements. Well, Jonathan, I just thought we'll highlight our viewers about Ambuja Cements and, what they did on the con call yesterday. But some part of the street was fearing that maybe there'll be a deletion from MSCI, which has not happened. So scaling back is okay. So do you think some part of this bad news is already factored in the last few days as well? Some part of that selling would have already taken place?
Undoubtedly, yeah, I totally agree with that. I mean, obviously markets react quicker than ever now to any news flow like this, and it's very difficult to try and get ahead of the news. So yes, I think a lot is factored in, but clearly there's still potentially more news flow to come out at some stage. So there is a certain degree of, I think, caution warranted still surrounding some of these names, and I think investors have got to expect volatility to carry on for some time.
Okay, so that's the Adani saga. Jonathan, how are you feeling about the market overall? It's been biding time, and will we see a decisive break, higher or lower, in your opinion? And what are you watching? Yeah.
Yeah, so I mean, clearly India's come off the highs over the last month, 2 months. Some of that money has definitely, from an FII perspective and a passive flow perspective, shifted to the likes of China, which is obviously reopening as such. But I think medium to longer term, India's fundamentals still look very attractive, and there's still a lot of very good companies that investors can look at to invest in. But in the short term, I think clearly the market, or a lot of global houses are focused on what is going on interest rate policy. Is, for example, the US Federal Reserve going to pivot their views, et cetera, and that is having quite a profound impact on the dollar, which traditionally has had quite an impact on emerging markets. Obviously, emerging markets had done very well over the last couple of months. We're sort of seeing a little bit of a pause as the dollar's strengthened. But I think the class, and certainly India, will still attract flows going forward, and that will benefit India. But I think dedicated emerging market investors, probably in the short term, will be looking to China and potentially elsewhere in the very short term. But the outlook for India still looks attractive. Obviously, valuations have come down a little bit, but we still like the look of India.
Jonathan, in the past, you've said that you like the Indian financial space. And the Indian financial sectors and the individual constituents have corrected in the last 1 week due to the linkages with the Adani Group. Have you used this as an opportunity to buy more shares? If you could just tell us, what has your portfolio done? Any ins, any outs?
No, not really. We tend to be quite inactive. We've just focused on the large cap space and the private banks. Yes, you're quite right. Some of them have certainly come off. I think HDFC Bank has barely budged, obviously hasn't reacted to this news at all, whereas some of the like ICICI has certainly come off a little bit. But Indian financials remain a fantastic way to get access to a very broad scope of industries within India. It's not just financials. You're clearly getting access to consumer and a whole bunch of other sectors when you're looking at Indian financials. So they still look very attractive. But broadly speaking, we've not made any changes. We don't own any public sector banks. We just focus on a couple of private sector banks.
Jonathan, thank you very much for joining in. Dilip, one more question. The sector which seems to have turned the corner are these new age technology companies like Paytm, Zomato. While growth was never a challenge for them, the big difference is now these companies are focused a lot on cash flow, on profitability, and that is what is dominating the management's mind. Does that make these stocks attractive to you? They've started running up quite a bit, but they're significantly off from their peak levels. Would you look at buying any of them?
Well, I think as a momentum play, certainly one can look at some of these stocks because the way Zomato, the way Paytm have said some of the things, I think the wind seems to be blowing in favor of a little more visibility for the profits and more visibility for the top line. Top line, of course, was never an issue, but more important is the cash flows. But I think still, having said all that, it's very difficult to value as far as all the stocks are concerned, and we still remain very clueless as to how to value some of these stocks. So, as what I said, at best one can take a momentum play, but more than that, to take a proper fundamental call on a long-term basis, in my opinion, is very nebulous and a little more hazy. So, I don't think I'll be in a hurry to buy any of these stocks in the portfolio.
Dilip, thank you very much for joining in. Don't know if it's an indication, but Zomato has suddenly slipped from the day's high. It's off about 3.5% from the top right now and is just about holding up in the green.